Hello, this is Solomon Davis, Right Side Trader. Today is April 2nd, 2023, and this is a quick video on option trading. Just my opinion for educational purposes only, for entertainment purposes only, maybe. A little something on options. What this is going to be is my 8 reasons for not buying options. You know, a lot of people like to buy options, talk about the money that they make and all that kind of stuff. But I always want to ask them, how often does it happen? How much money did it take you to make that much money? And all, you know, you don't have to show me the trade. How long was you actually in that trade? That's the thing. Because you can see my trades. My trades, I'm in and out for a minute. I'm a quick trader when it comes to buying options. I don't like holding them too long, but in a bullish market, I'll get where I swing them for the week. I'll let you know. I do that when I see the setup. But let's get right on into this, and I'll let you see what I'm talking about. First of all, when it comes to options, my number one of my reasons, and all things that you got to think about when you're buying options is the commissions and fees. On this particular trade that I went over with the guys and all, we was doing some calls, we was doing spreads, but we had to buy a call, we had to buy a put along with the call and the put that we was actually selling. But what I want to really highlight here is commissions. Commissions on that particular trade, we was buying 10 contracts for 10 contracts per leg, so that was 40 contracts that we was actually purchasing. So in order for us to place that trade, it cost us, even though we were collecting a credit, it cost us $20 to place that trade. In some cases, when people are trading options, sometimes they don't look to make too much more than $20. So that's one of my things. You got to be careful of how much does it actually really cost you to place that trade. The other thing is options are a high risk product because of they are one option contract contains 100 shares. So us trading that 10 contracts, really we were controlling 1,000 shares. Worst case, on that particular trade, this high risk part of this trade, on the put side is that since we had sold an option and 1,000 shares worth of options, if we had assignment, we have that risk assignment that would have cost us $32,000. Yes, $32,000 because it was a 32 strike, 10 contracts. That equals 10 times 100. That equals 1,000 shares that we were controlling at $32 a share. So if the market had dropped and they forced us, somebody did an exercise on us on that particular leg, that would have cost us $32,000. That's another reason why you don't want to sell. But when it comes to buying those options, usually you got to call that direction right. And in this particular case where we was actually purchasing this option, we were right in the middle. So do we play it down based on the bearish pattern that we see? And if we did that, we'd have saw this happening and it was started dropping. We'd have been kind of happy and it might have been feeling pretty good at the time. But as we can see, it ended up going against you a little bit. And then it finally went down, looking at the chart. This is hindsight, though, seeing that. But the other thing when it comes to options that I want to dig into a little, just mention right quick here, when it comes to options, I want to get here to the platform, go to the trade tab, and look at these options. The other thing, other than it being a high leverage product, that 1 to 100, is sometimes you might be trading something that's not that liquid. This is not bad, but look at the put side. Open interest. Open interest is very low in this area right here. It's high in this area down here where people saying, okay, this is my bottom based on the chart that we were seeing. This is where we was at for our bottom, and this is where you would want to be, not buying an option, expecting it to go down when all these people are sitting here probably selling options, expecting this market to go up. So that comes to the other thing, though, when it comes to options, is the lifespan. Right now, these options that I'm looking at are going to expire this month. So they're going, and I'm in April, so they're going to expire in less than 20 days, 19 days to be exact. And all. So that's the other thing that option traders obvious option traders tend to do. They like to buy the current, on this particular thing, it's the current month. That's the other one of the other reasons me selling my options, it's time for me to be out of that thing. Yeah, it may work out for me, but at this time, it's getting to that point where, yeah, they should be traded a little bit more, but you got zeros on the bids here. Nobody's going to be willing to buy any calls. If you buy a call, who are you going to sell it to? It's nobody, and you expecting this thing to go up above this. So that's probably it's not going to work out too good for you unless this thing does go up, and then you do get some bids over here. And as you can see, the time thing, the market going up, and look at that spread. That's a 10-cent spread. Even if you buy out here, you don't want to buy this thing. The prices are not good because they're illiquid. You don't have enough traders here. Even though that's 700, that's not really enough. 16, that's not enough. That's what you got to look at when you're looking to buy options. Is there enough traders over there to buy with you? And the other thing is, are you giving yourself enough time when it comes to buying that option? One of the other things, really, when it comes to buying an option, is the probability of you actually being right. I know you're a genius. I know you can see these charts and know how to read these things, but let's go back to that chart that we was just looking at. Let me go back over here. When we was actually placing this trade, that was one of the reasons I chose the strategy that I did. I didn't try to, guess, this thing should go down. Would I have held it, it goes down this little bit, and then I see what looks almost like a bullish pattern and want to get out of that trade. Was that trade profitable in a couple of days? It went down less than $1. I doubt it. It wouldn't have covered probably the spread that was on at that time. So that gets back to the last thing that I want to hit on here is the whole emotional part when it comes to trading and trading options. Options, they move, and then when they move a lot and moving a lot against you, you'll see this happening. You wouldn't have saw that other day. You saw that and looked like this thing was going to go up on you. You might have thought that. Who knows? Again, emotions are all involved in this thing, and you might have jumped out of that trade for a small loss or maybe a pretty big loss. Who knows what the loss was at that time? And then the next day you see this, and then in a few more days it's down here, and you would have said, "Oh, I could have, what I could have, should have, would have, did," and made money on that put going down. And then what you have the nerve, the whole emotional part, once you do see it down here at the bottom, do you have the courage now to actually purchase an option, purchase a call to go back up? That's what I'm saying. It gets to where you need to understand the patterns that you see in the market. You need to make sure you take your emotions completely out of the trade and just put your position size right, and just learn to play what you see. You see a bearish pattern, give yourself enough time for that bearish pattern to play out. You see a bullish pattern, know to get out of your bear trades, get your bull trades on, and see that play out. And let it play out based on the range that you're in. Learn to understand, also, one other thing, I was talking more about emotions then. The other thing that you got to be aware of, I want to get one more in, is volatility. When it comes to buying options, you really want to buy them in a low volatility market. Right lately here, we've been having a high volatility market. When I say high, anything for me above 20 is kind of high, because we've had markets where the market has been down in the low teens, in the low double digits, like 10, 11, 12. So that's the ideal time to buy options. But usually when you're trying to buy options down like that, things are not moving that much, and that's why volatility is low. And still trying to buy options at those low price, at that low volatility thing, it's you have to call direction right. So now to sum it all up, I'll just slide my little cheat sheet that I was using here. When it comes to buying options, be careful of your high fees and commissions. Understand the high risk. It's a leveraged trading product. Understand volatility in the market. You want to actually be buying when volatility is low. Understand that you want to be buying. You want to be in a liquid market. You don't want to be in a illiquid market where there's not enough traders out there for you to trade with. Also, remember, I always tell people when they're buying options, give yourself enough time to be right, ever what that means. Based on the chart that you're looking at, how many days does it normally take to make the move that you're looking to make? What is the level that you expect it to go to, and know to get out of those trades at when it actually reached those levels. It may not go exactly where you want it to go, but when it gets close and you're profitable, learn to get out of your trades. And that the whole, because again, the low probability you actually being right and you were right, take your profit. Because they try to say that a lot of people buying options don't make money, but there's a lot of people who do make money, because they're disciplined and they know when to get into their trades and they know when to get out of their trades. Because number one, they've taken the whole emotional part of that trade out. They trade in their plan, they plan their trades, and they learn to trade their plans. So I hope this has been helpful. Again, when it comes to buying options and all, and happy trading, and talk to you next week. I'm gonna start doing more little stuff like this and all to help people out. But this is again, sum it up. Reasons not to buy options: fees are too much, there's high risk, volatility is high right now. You're trading a leverage product and you may not understand the leverage that you actually have. Illiquid options, trading illiquid options, don't do it. If you see zeros on bid or ax, don't trade them. The low probability of you being right. Make sure you understand the charts and what's going on out there, so you would increase that probability of you actually being right. And the last and most important thing, I believe, is getting that whole emotional part out of the trade and learn to plan your trade and trade your plan. All right, that's all I got to share here today. Hope you guys have a great weekend. Hope you guys have a great week coming up here trading. Talk to you later. Bye.